after this bar collapsed here and closed below bar one, so closed below the prior low of the day, I sold a small pullback, thinking that we should get a second leg down from this collapse. I got filled there, 20 cents for 5 shares, so $1 profit. All right, so we ended up getting two pretty good bear bars here. Tail on the bottom and tail on top here, but still two pretty good bear bars. So I think that's enough of a surprise that we need to get a second leg down. My thought here was that after the two big bear bars, I thought after this bull signal bar, I thought because it closed on its high, it's a little bit different, but I thought even if it just triggers, it might then create a low on sell. So I wanted to be in for that. And so I sold the close thinking that we won't get a second consecutive big bull bar, which is what we're getting now. So that I didn't expect that. Just gonna put my stop in because it's accelerating pretty quickly. I only sold it with 3 shares, and as it rallied a little bit, I thought I'm gonna trade half size here on this first entry and then look to add higher. So I added another 3 shares, a little bit higher. So that gave me 5 shares to risk $5 up to here, and then I was gonna add the other half if we got a sell signal. So what I was expecting was that either we create a low on sell after this buy and that it wouldn't be enough for a rally, or that we go a little bit higher and then reverse down with a bear signal bar. But instead we got this really, really strong rally. So clearly I'm on the wrong side of this. I didn't expect this, and I do think that it's unusual. I think this is unexpected. So I think it's an okay thing to do because this is unusual, but at the same time, it just shows the importance of waiting for signals. So here, I was jumping the gun a little bit, saying a low 1 is likely or a low 2 is likely. So I want to get in at least half here, and then I'll add the other half. But then you get stuck in situations like this. So the higher probability situation would have been to get a low 1 here or a low 2 and then sell below it for a pullback, for a second leg down, instead of anticipating it. So I'm stuck in this trade. I considered getting out above the second bull bar because it's two really big bull bars in the opposite direction, and that's not supposed to happen typically. So it might be okay to just exit there for a smaller loss instead of waiting for my stop to get hit. But I didn't do that. So I'm going to wait for this third bar to close. And if it holds up here like this as a doji or as a small bull bar, then I'll probably exit. If it's a bear bar closing on its low, then I may stay in. Okay, so I did end up closing that out. I didn't lose as much as I thought I would have. So I ended up losing less than I thought I lost. I thought it was going to be around $4 or $5, but I guess because I exited early, I lost $2.65. So I was up $1, now down $1.65. I have an order to buy above this bull signal bar, closing near its high after 2 consecutive bear bars. So climax, pause, and then a small second leg down, reversal up from last week's high. It's possible that this is not it doesn't meet the criteria for the second leg down from this sell-off. But I think if the bull signal triggers, then it increases the chances that we either go up and test the sell climax high, or if we then reverse down below the low, that we'll get a second reversal up, and then I can buy my other half above that. So right now my stop loss is a measured move down from the signal bar. I think the sell-off is climactic enough, and the location is good enough that I think it's worth taking this, betting that this is the second leg, but it's still possible that it's not, and that we need to get one more new low, and then get a reversal up. I bought the low of this doji here. I bought with small size with a wide stop. My premise was that We had a 2-bar climax here and a pause, so probably one more leg down. And we got a leg down, but it was stronger than the first in terms of the size of the bar. So the bar was bigger than either of these bars, so I thought strong enough climax, it might need its own second leg. And then we got a pause here on the doji, and I thought I could start buying at the bottom of the doji, betting that this third climax will be equal to or smaller than this one. So I bought below there, have a wide stop, betting that this is potentially the last leg down. So obviously if it's a collapse and goes against my premise, then I'll get stopped out on small size. But if it does start to reverse here and get a bull signal bar, I can add above it. So I'm long at the low of the doji. I thought this was expected, a leg down from this one, equivalent leg down, and now we have it. So if we can start to reverse up from here, then and get a bull signal bar, I'll add above it. So I put my stop in there, which was a measured move from this climax. And so if it stops me out, then my premise was wrong, and the climax, this third climax, is bigger than the second, so I shouldn't be in. And I mentioned this before, that in climaxes like this, always better to wait for a signal bar. But I didn't do that again. There's so many factors in decision making that I know that I've said that I knew that I'd be held accountable, and that I'd have to address it, because I said it in another video that in these types of situations, always better to wait for a signal bar because it can collapse forever. And better to, I think it was like last week, and always better to buy above a signal. That usually, if you're on average, if you're more conservative and wait for the buy signal, it's usually going to be at the same place where you buy the close or buy with a limit order. So here I bought this low. If this becomes a big bull signal, then it'll be at the same price. If I had just waited, I'd have way higher probability, and I could trade bigger size and no risk of this happening, me getting stopped out. So, but then in the moment, it's so different. It feels like, okay, I know that I'm not supposed to, but this looks pretty good. Like consecutive climaxes, doji, it's weakening. We're at last week's high, so good context. And somehow, knowing that it's the wrong thing, or knowing that I've said not to do it, knowing that I'm gonna have to address it, I still do it. It's a really confusing type. Like it's so strange that in my head I know that I'm gonna address it if I get stopped out. I'm gonna say that I knew I shouldn't have done that because I said in a prior video that that was my lesson. It's always better to wait for the signal bar. I even set it up here, like the importance of waiting for a signal bar. That two big bear bars down, so probably gonna get a second leg. But if you don't wait for a signal bar, you're more aggressive. Obviously, you get a better price in these situations if you're more aggressive. But when the market's collapsing, if you wait for a signal bar, you often get a very similar price and way less risk, way higher probability. So, but in the moment, somehow I convince myself that this time it's different. So I have to catch myself doing that, because if this bar closes on its high, it's going to be right where I bought. So it defeats the purpose of using the limit order. Now, obviously, there are some benefits to using a limit order. I just mean that when it's collapsing, it's just better to wait. So not a great buy signal, but given the context, really big tail on the bottom, consecutive climaxes. I think my target was here. I just moved it up a little bit because I think if this triggers, I think it's reasonable to expect a little bit more than where my target was. I was initially just buying this for a scalp, and then thinking that if we get a bull signal bar here, then I'll buy again above it. But now, given this bar and the reversal after consecutive climaxes, I think I can raise my target a bit. I won't add above it. If it was a big bull bar closing on its high, I would add above it. But because it's not, I won't add, but I'll move my target a bit higher to see what we get. I think we should get back up to last week's high. I think there are buyers below this tail, so I'm willing to add below, same stop. So I bought 5 more shares at the low of this bar, thinking that there are buyers below. And I'll move my target down a little bit. After I added here and I got into full size, I was okay with exiting with 30 cents on my first, or 30 cents on my average, I think. So up to 220, which means I made about 350 on this trade. So yeah, about 35 cents on my average. So I was okay with scalping out. Entry, not happy with. But management, I think, was pretty good. After this prominent tail on the bottom, consecutive climaxes, it probably is a buy above, but I was feeling a little bit too nervous to buy above because it didn't close on its high and didn't have a big bull body. But it's probably a buy above. So again, in this situation, if I didn't buy with the limit order, I could have bought above this bar, which would have been a better price. And my second entry, which was below this bar, was a better price than my initial entry. So if that keeps happening, where the higher probability entries are lower than my initial entry, that means I'm taking a really bad entry. Because if my entries are good and I'm trying to get higher probability, that should mean that I'm paying with price. So I'm waiting for higher probability, which means I'm going to get a worse price. But instead, in a lot of these situations where I'm buying with a limit order in a collapse, my second and third entries are usually better than my first.